give you some insight on the very latest in the world of business. The JSE All Share Index is trading near the flatline, around 64,617 points, close to the lowest in over a week, amid lingering concerns about the global economic outlook, tighter monetary policies and the ongoing war in Ukraine. Roy Mutooni, analyst at ABSA Asset Management, joins us now for the latest market moves. A very good afternoon to you. Thank you for your time. The rand is seemingly trading slightly better today against the US dollar. Talk us through the sentiments influencing trade there.
Hi, thanks for having me. So the rand is probably flattish to marginally weaker for the day, but I think it's better to look at it more in perspective. It's probably about 2% down for the week and 12% down for the year. What we're seeing here is a bit of a balance between the negativity that's coming from the globe and the expectations around U.S. inflation and tighter monetary policy there, and also the really high yields that you're seeing here. The 10-year is trading at about 11% yield, which is quite attractive, regardless of what's happening in the rest of the world. So it's quite a tight tug of war, and it's probably where you're going to see it remaining unless you see some dramatic news out of U.S. CPI tomorrow or the FOMC minutes that come out also tomorrow or on Friday.
Now, Russia's current account surplus grows far less than the forecast, the difference between exports and imports reaching an estimated $51.9 billion in the third quarter. What should we make of this data?
So the current account surplus, like you said, is a balance between what you export and what you import. And for Russia, this has been really strong since that war began, because they exported a lot of energy and commodities and everything. But what you've seen is that commodity prices have declined and they've stopped exporting gas to their biggest customer, that's Europe. So when you combine those, and plus the fact that their imports are also growing, it means that they'll have less of a surplus as it goes. And that will tighten their pockets as this war continues and sanctions continue to bite, and also the talk of price caps potentially coming in place. So I think the likelihood of an upside surprise in subsequent months is decreasing, and the likelihood of more disappointment is increasing.
The U.S. has fined Hyundai and Kia car parts suppliers for child labor violations. What's happening there?
Yes, that's a fascinating story. When I first saw it, I thought they were talking about child labor someplace in Asia, but this is actually in the Kia and Hyundai factories in Alabama in the U.S. And it seems like an investigation found that some employment agency had supplied children as young as 13 to 15 to work in these parts factories. But fortunately, I guess they were caught. And these are the fines plus training and a lot of retribution that's come through from the U.S. authorities. Just fascinating to imagine that this still happens in places like the U.S.
Yeah. Bank Serve Africa's Economic Transactions Index declined further in September to an index level of 131 basis points. Talk us through that data.
Yeah, so this is an index that tracks all online transactions, all transactions that go through bank serve and payments and everything. And I think what it's showing you is that the momentum in the economy is declining. It's the fourth straight month-on-month decline. I think we're as low as we were in December. And I think it's a reflection of the difficulties we're seeing in the economy. Lower business confidence, lower consumer confidence, so people are retreating into themselves. Businesses are doing a whole lot less. You've also seen it in all the confidence surveys that come out, and the business activity surveys. Load shedding, no doubt, contributing to all of this. So I think it's an early indicator of the slowing momentum, and we'll see it when we see the GDP print when it comes out later on this year.
And Famous Brands has announced plans to buy its Midrand head office properties for 181 million rand. What are the specs of this sale?
So it seems to me like this was more a governance thing than any big investment thing. So the buildings were owned by one of the founding families and some related people, one of who still sits on the board. And Famous Brands rented it from them. So by buying them out, it solves one of these long-standing corporate governance concerns, and also gives them the flexibility to invest in the buildings and expand their presence within those particular parcels of land. So I think it's just a simple cleanup. The market should like it, but not really significant in their lives.
Very well. Thank you so much for your time, Roy Mutooni, an analyst at ABSA, giving us a breakdown of the markets, the very latest in the world of business. We'll leave it there for now.